How billionaires pay less tax than you. Do you want to know how much taxes the billionaires pay? In 2009 and 2011, Jeff Bezos, a multi-billionaire who owns Amazon Corporation, paid no federal tax. Elon Musk either did not pay any income taxes in 2018. Wow, but how? It may come as a surprise to you that Elon Musk, Jeff Bezos, Mukesh Ambani, Gautam Adani, and other world billionaires pay less tax than you. Most people have never heard of a stepped-up basis, yet it might be the most important tax loophole in America, allowing billionaires to transfer large sums of money down to their descendants while paying capital gains taxes. Billionaires have dodged taxation by taking low-wage jobs and building fortunes in stocks and other assets. Instead of selling the assets and paying capital gains taxes, they borrow against them to support their lifestyles. Doesn't it seem intriguing? Let's do some more digging. People like Elon Musk and Jeff Bezos did not become the world's richest people by being paid a salary. They wanted to be compensated in the form of shares in their companies that they run, even though shares are not the same as a wage. You simply have to pay capital gains taxes. When you sell stocks, the highest tax rate on capital gains is 20%, but earnings, salaries, and bonuses are taxed at 37%. That is only the beginning of the advantages enjoyed by many billionaires. When it comes to taxes, the slogan "buy, borrow, die" should be followed. The basic idea is that capital gains tax applies only when you sell shares. Obviously said, don't sell them. Trying to consume potentially without having to unlock a lot of cash or liquidity is a crucial aspect of the buy, borrow, die strategy. This is generally reinvested in a company. However, there is an inherent flaw in this technique, because if you're not getting paid a salary and you're not selling your stock, how do you come up with the money to acquire yachts and private islands? Well, that's where the borrow part of the strategy comes in. You simply borrow money using your shares as collateral. Elon Musk can borrow money from a bank and use that borrowed money to buy. Whatever billionaires buy and borrow in our system is not a taxable event, and it gets even better than that, because if you borrow money from the bank, you may even be eligible for tax breaks. And then there's the final part of the strategy, the kicker when they pass away. They can then transfer it to an heir who does not pay tax when the asset is transferred to them. In the United States, this is referred to as the step-up in base. The ultra-wealthy employ strategies like these to avoid paying taxes almost everywhere, all totally legal in the United States. Joe Biden attempted to sabotage the die part of the buy, borrow, die approach, but the president's push simply did not have the necessary congressional backing. Another proposal, to tax a person's net worth on a yearly basis, was rejected by the majority of academics. A wealth tax, according to our Constitution, is controversial since it restricts the authority to tax property directly. As a result, many tech millionaires who gained their riches during the pandemic may pay a lower tax rate than you, and the prospects of this changing anytime soon are minimal. At the end of the day, I believe the billionaires will prevail, but the basis of our income tax regulations will not be altered significantly. When it comes to business, the hustle, and creating money, Grant Cardone is one of the most well-known names in the world. In one of his books, he explains how to take your talent, boost your income, lower your tax bill, and then get your money to work harder for you. As a summary of his book, consider the following scenario. When a footballer earns $2 million each year, agents or managers must earn less than $400K, and then you're left with $1.6 million. He then stated that $1.6 million may be invested in real estate. That $1.6 million can buy the person $4.8 million in real estate. Then, $2.4 million in depreciation may be deducted. A maximum of $800,000 can be deducted against his income each year, but it can be carried forward. Earn passive income from real estate. Repetition of the process every year while waiting for the assets to appreciate. Borrow money or take out loans against your assets, properties, if needed. no tax. What you did was put your earned money into real estate, which generates passive income that will eventually displace and replace your earned income, allowing you to live comfortably as your investment grows. Grant Cardone's jet is another example. Grant's accountant contacted him and said he had a major problem. His issue was that he made too much money and would owe the IRS. Grant asked as to what he might do to solve the situation, so he bought a $50 million plane that qualified as a business expense. This allowed him to reduce all of his income taxes for the year. This happens because the IRS does not tax your gross income, since the revenue you made from your business isn't always money that went directly into your pocket. After deducting your business expenses, the IRS taxes your business income. This plane kept him from having to pay any taxes that year. You want to pay a lot of taxes? That suggests you're making a lot of money. It's not about avoiding paying your taxes, but about how much you can deduct. Deferring your taxes allows you to use the money to generate passive income. Smart investments will pay for the taxes over time. The main reason Grant Cardone is interested in investing in a real estate business is because of the distinctive nature of the real estate market and its ability to be much more stable when it comes to evaluating the property when compared to the extremely volatile nature of the equity market and cash flow in general. And that's it. Buy, borrow, die. That is how the wealthy keep their lavish lifestyles without paying taxes. After collecting vast assets, they borrow money from a bank rather than taking income in the form of a salary from capital gains. Their lifestyle is supported by borrowed money, and the interest rate they pay on the loan is far lower than their tax rate. With that said, the real question here is what influence these wealthy individuals and holding businesses have on the country's lawmakers, officials, and decision makers. Before we wrap up this video, I'd like to share a quote that inspires me to keep going. Good things happen to those who hustle. Anais Nin. If you want to start your own side hustle and start to expand your income, there are some videos marked below. Get in touch and we will get things moving. If you want to change your life, you need to make a change. If you enjoyed this video, please make sure you subscribe and turn on the notifications bell. Thank you for sticking with me all the way to the end. Take care, stay safe, and I will catch up with you soon.